Hello everyone, welcome back. I got some really good ones for you today on this Tuesday, March 12th, 2024. A lot's been going on with the markets, especially in the meme coin space, crypto, like Bitcoin hanging out at all-time highs, S&P 500 hanging out at all-time highs. Guys, lots of exciting things going on in the markets, and that's what we're going to be discussing for today's video. So, welcome back. Glad you made it. Glad we can hang out together. Sorry I've been gone for a while. Been staying, pretty busy, doing a little bit of traveling, got to do tax prep for some businesses and stuff. A lot of things keeping me distracted, so been a while, but hey, good to be back. I hope you've been well, and let's dive right into these markets, shall we? Start with that S&P 500. The S&P 500 right now at 5,175. Guys, that's a new all-time record high for the S&P 500. Pretty wild. We'll get into the reasons why. We also got the NASDAQ right now at 16,265. That tried and true Dow Jones Industrial Average at 39,000. Got a dollar that's flat today in relative terms. The dollar measured against other fiat trash government issued currencies, having a pretty flat day today. Lately though, the dollar in real terms, guys, when priced in gold and Bitcoin and, priced against sound money, that dollar's just been getting incinerated, but we'll discuss more on that in a bit. We got metal slightly down, so that's the real money, slightly down, but hey, it was good to see gold hitting that all-time record high pretty recently, like 2100, so that's cool. We're fans of stacking on this channel. We don't really invest in the precious metals derivatives or the streamers or the stocks or these miners. We really just advocate for stacking physical for the long term, and you don't got to go overboard, but just stack some. And so, stackers, keep doing your thing. Congratulations there. All good things going on, but it's boring. You know what I mean? You're not going to get rich doing it. Really, it's just like having a supercharged savings account. It's not paying you any interest or yield, but as they're sucking the life out of the currency, the gold price kind of goes higher. Basically, if gold was 1,000 an ounce in 2015 and it's now 2,000, that's 100% since the lows in 2015. That made for a great savings account. So instead of just having a savings account with doll hairs in it, you just stacked physical gold and try never to use it or sell it, kind of like what you do with a savings account. It would have supercharged you, so I don't know. Gold doing well, but pretty boring. Okay, this fly is really annoying. I just took a shower and it really likes my shampoo or something. I don't know. 10-year yield right now hanging out at 4.15%. About a month ago, that 10-year yield was still at 4.15%. I think the 4.15% 10-year yield would become problematic. So that yield in the bond market of 4.15 would become problematic for the stock market if it was not for the Fed kind of coming to the rescue and reiterating to markets that we're going to be getting rate cuts going forward. So the market doesn't really care that the 10-year yield is hanging out at 4.15%. Because it knows the Fed is coming to rescue it with interest rate cuts. So bond yields are arguably a little bit high, in my opinion, for the stock market's liking, but the stock market doesn't really care because it knows interest rate cuts are coming. That's kind of the thesis there. So yeah, bond market pretty stable though. That 10-year yield hasn't really moved at all. If it had moved up a lot, that would probably put downward pressure on risk assets. And if the 10-year yield came down, say into like the 3%, that would put, more upward pressure on risk assets. But risk assets don't need that bond yield to come down to push up on the stock market, because the stock market knows even if the 10-year yield's at 4.15%, we're going to get interest rate cuts later on this year. So that's kind of what I'm getting at there. Fed's been adjusting expectations. So the Federal Reserve, this time last year, it was a question of how many more interest rate hikes we're going to get. And now here we are a year later, it's how many more interest rate cuts are we going to be getting this year. So a complete reversal, guys, in policy. We're going from we're going from a hiking rates, a hiking cycle to an easing cycle, and that's gotten the markets very giddy. That's why the three major stock indices are pushing all-time highs right now. That's why gold is all-time highs. That's why Bitcoin is at 72,000. Because the market now knows that the next thing that happens is going to be interest rate cuts, and it's just a matter of when and how many. And that gives the market all the giddiness in the world, because it knows the Fed is going to be backstopping us like from here on out. Now, reality could play out a little different, right? You could end up with a Fed that's like, no, we need more interest rate hikes. And we've seen a little bit of that, meaning the Fed, they're not talking about hikes, but they are talking about less interest rate cuts. So back in January, market was pricing in like 7 interest rate cuts for 2024. And now that number's come down to like 3. But the market doesn't really care because it knows interest rate cuts are coming, and that's the important thing. I'd say about May, June, we're going to start getting these cuts, right? So look for May, June to roll, next 60 to 90 days, we're looking at our first interest rate cut. It's probably going to be about 1% or 75 basis points, somewhere in there. But guys, that means that the easing cycle has officially begun, and that really is the green light for risk assets to move higher. Anything can happen, though. You could end up in a situation where they start cutting rates and the market's like, I don't know, your policy sucks, and starts to kind of buckle. You see a little bit of that. That's kind of like the noise. But, you step back, take that 100,000 foot level, net, interest rate cuts make stock prices, gold prices, Bitcoin prices go higher. Energy prices higher. Energy has been really kind of lagging lately. What is crude at right now? Like 75, 80 a barrel, somewhere in there probably. Maybe like 80 a barrel would be my guess. I'm sorry, I haven't checked it before starting this video, but I think fair value for crude is like 100, 115. So I see a lot of upside for crude, guys. I see an energy boom potentially coming. It's just kind of my trader senses tingling. Houston as a city, kind of like your energy capital of the world. It's not in a boom right now, but Houston does have those years where it goes through kind of a boom. I'm from there, haven't really seen much of that. Not seeing a lot of action right now in the energy space. So I think more exciting times lie ahead for mega cap energy stocks. And I'm buying here, guys. I'm not telling you guys what to do, but I bought some ConocoPhillips today. I want to have 100 shares of ConocoPhillips, 100 shares of Exxon, 100 shares of Chevron, 100 shares of Halliburton, like for life kind of thing. They're not even, to me, trading vehicles. So I don't want to like trade oil. I don't want to trade natural gas. What I want to do is become an oil baron before the next boom. And then, maybe if you want to dump half those oil stocks halfway through the boom and let the last half ride, take all your money back. Hey, take your initial investment half. The old sell half at a double routine, right? So maybe I'll look to do something like that. But oil's not booming right now, and as soon as that starts, I kind of want to be well allocated for it. But when that could start, I don't know. But I do know this: the dollar's really weak. All the other proxies for a weak dollar are doing extremely well, and energy is not. So maybe they're going to keep energy prices low through the election, right? Or try to. Like maybe Biden wants to dump as much of the strategic petroleum reserve onto the market as he can to keep prices lower, and then after the election, then we'll see oil prices start to move a lot higher. But just telling you guys what I'm doing, and I'm looking into my hazy crystal ball and wondering when the heck energy is going to catch up to all the other cool stuff we like on this channel, like crypto. Our cryptos are killing it, like gold's doing fine, silver, whatever, it's doing fine. Stocks, especially tech, we like tech on this channel, killing it. So we're just kind of waiting for energy to catch up, kind of thing. The meme coins, guys. Oh my gosh. So I made that meme coin compilation for you guys about 6 days ago. You can check it out about a week ago. That's just a little victory lap for me. I can't imagine many of you would have heard me like kind of talking about meme coins and really gotten on board with that. But full disclosure, I acquired like over 1 billion Pepe coin last year. And yeah, that's like, it's not generational wealth. It's close. I've got really cleaned up on the Pepe coin. Clown Pepe's been really good to me too. And Pooh, I bought Winnie the Pooh coin. Bought a billion of those. I had 123 billion of those a few weeks ago. Now I've drawn it down to about 25 billion, letting those ride. Dumped the other 75 billion. Well, I had really 123 billion down to 25. So I've dumped about 100 billion Pooh. I tranche it out, you guys. So the Pooh buys, I probably did like 10, 15 of those last year. Pepe buys, I probably did 10 or 15 of those. Little buys, guys, they were like $50, $100, $55. Like seriously, they weren't very big. You acquire this position of Pepe worth like $600, $700, 1.248 billion of them. And then as soon as we started moving up, like, 100%, 100%, 100, guys, my Pooh coin ran like 1,800% in like 4 days or something. I don't know. Check the chart of Pooh coin. It's unreal. And, like I said, full disclosure, So I have about 25 billion of those poo coin left. It's worth like $1,400 or something like that. So, you know, nothing too crazy. And I've already dumped enough so that if the meme coins crash, I don't care. Like all the meme coins I've left in, I've sold a good amount of Pepe. If all of those meme coins crash, I don't care, because I've already pulled my initial investment out plus profit. I've already de-risked those positions and protected the downside there. So clicking my heels to the bank now, you know what I mean? And rolling a lot of those meme coin profits into, you know, stocks. Boeing, Amazon. Boeing's going through a bit of a rough patch right now. Got all these doors flying off and, you know, people getting hurt. But no, Boeing is a monopolist in the space, okay? I hate to say it, but it just is what it is. They own the alien spacecraft. I'm not really worried about it longer term. So actually, I've been averaging down on my Boeing. My Boeing's been a real stinker. Another stinker I own is Rivian. Talked about it in the last video. Started buying my first shares of Rivian at about $15, averaged down a little bit, got some fills in the 10s. So right now I'm sitting at 50 shares of Rivian at a 13.29 average. Way I look at it is that around 660, you know, $650 position, something like that, 600. If that wants to draw down and Rivian goes bankrupt, you know, I might lose $450 there. But if Rivian gets its act together, you know, maybe $4,500 worth of upside. So you see how I did that? My downside's 450 and my upside's 4,500. I'd make that bet. It's 50-50, and I'd make that bet all day. If you told me 50-50, if you win, it's 4,500, and if you lose, it's 450. I'm just gonna sit there and flip the coin all freaking day and click my heels to the bank. So, you know, on the flip side of that, you might be thinking, well, why don't you own 100 shares of Rivian? Why don't you own like 250? Why not 1,000? Because I don't want Rivian to go bankrupt this year and then I take like a $4,000 drawdown. It doesn't take many of those to really screw your year up, you know? So my downside's 450, my upside's 4,500. That's how I like to play my game. But you know, Rivian's been a stinker, but you know, did you know Ford owns 12% of Rivian? That's really interesting. Rivian also just dropped their SUV that's only $40,000. So, you know, that was killing Rivian, guys, that nobody had $70,000 to buy one of those really cool EVs. Well, now they have one that's kind of for everybody. Might give them a lot more market share. I really like the product, guys, okay? I really like, full disclosure, I own it, and I'm not telling you to buy it or sell it. None of this is a buy or sell recommendation. I am not a licensed fiduciary. I'm an armchair amateur journalist slash analyst. Like, I just sit here and you know, try to give you sense so you can go hunt. None of this is like, buy at this price, this amount. You gotta, you know, we're all at a different place in life here. Maybe if I was like 70 years old and not drawing any income, I wouldn't be in meme coins. You know what I mean? So, you know, tailor your portfolio and construct it kind of for your situation and for your risk tolerance. But I like Rivian. I own 50 shares, 13.29 average. There you go. Let's hope it works out. If it rugs down to $6 and they go bankrupt, you know, throw garbage at me because I was wrong. I'll lose $300. Whatever. Not catastrophic. Really, for anyone, it's not going to ruin your life. Like if I stole $300 from you, like, it sucks. It's a couple days of work. Like, it'll set you back a little bit. You know, but would it completely destroy you? Absolutely not. If it would, then don't, you know, go far away from this channel, you guys, and maybe investing, I would say maybe investing's not for you, but guys, investing's for everyone. Have you noticed that? Have you noticed if you're just saving dollars and working a job, you're getting incinerated? Yeah, that's the Fed sucking all the purchasing power out of the dollar. And if you're a novice, you think maybe that'll cause market instability and a crash, but the opposite. Market crashes up when they destroy the currency like that. Oh, fortunate for them. You know, they're the ones that own all the stock anyway. Check out Nancy Pelosi. Her trades are on fire, you guys. NVIDIA calls, things like that. But anyway, moving on from, you know, the stinkers, Boeing and Rivian. We got NVIDIA right now hanging out at like 920 a share. That's unreal. Unreal, you guys. But this generative AI computation speed boom, it's for real. About a year ago, I did the video AI Wars Begin. I was wearing a bright red shirt. Scroll down about a year. I feel like I fired the starting gun for the AI Wars, but there you go. NVIDIA just bubbling up more and more and more and more. You know, I thought the NVIDIA bubble was going to burst at 500, and now we're close to 1,000. The lesson there is bubbles don't burst, guys. Bubbles double, then burst. So we got in a video just, you know, bubbling up like crazy. Got Mark Zuckerberg calmly dismantling Apple from his couch a couple weeks ago. Check out the video where Mark Zuckerberg reviews the Apple Vision Pro. Guy's unreal. He just calmly, kind of like I am right now, just sits there, takes that thing apart, man. Just completely puts Apple on the back foot there. Still like Apple though. You know, I don't like Mark Zuckerberg, but that video did kind of change my opinion of him. You really should check it out, because we know him as like this lizard person that like can't even drink water without appearing awkward. And you know, he really came out natural. You know, we're going to be with him for another 30 years, right? Like the CEO of Apple, Tim Cook, he's probably going to retire in the next 5 years. You know, Bob Iger at Disney, he's got a couple years left in him. He's out by 2026. But these guys like Mark Zuckerberg, you know, we're going to be hearing from this guy until I'm grayed out. I'm salt and pepper, still doing these videos. So I'm not really on team Mark, just like I'm not really on team Bill Gates. I really don't like those guys. But I will not bet against them, and I never have, and I never will. They're apex predators, okay? So kind of like with Elon, pretty polarizing dude. A lot love him, a lot hate him. Don't bet against that guy, though. You would have lost everything. And if there's one person on the planet you were supposed to give every penny you've ever made to, it was Elon Musk, the richest man on the planet, you know? So Mark Z put Apple on the back foot. You know, Meta has this lighter, cheaper Oculus Quest 3 that's going to compete with the Apple Vision Pro and give it a run for its money for like a seventh the price. So check out what Mark Zuckerberg's video. He came out very cool, calm, collected. He just took him apart, man. He's crazy. He's still got that fire in him, I guess you could say. So keep an eye on Mark Zuckerberg. Way to go, Mark. Good for you. This brings me to the metaverse, guys. We like the metaverse on this channel. I did a video about a year ago. Don't let the metaverse drink your milkshake. Metaverse ain't drinking anyone's milkshake. That thing's been on life support. But we're coming out with these new headsets, you know? We saw Decentraland, the cryptocurrency for the metaverse, you know, bubble up in 2021. That bubble burst, and it's like 50 cents, 75 cents per mana coin. But I think we're coming back. And I bought more Decentraland, so Mana, and Sandbox, Sand. I bought more of those cryptos, you guys, because I think the metaverse is now on the mend. I think, you know, I'm weird about everyone getting plugged into the Matrix. Like, I get it. And I might not even spend that much time in there. But think about, like, Wynn Resorts. When Wynn or MGM Grand realizes not as many people are coming to their casinos to gamble in person. And then the metaverse, like Decentraland, comes out with a Wynn Resorts virtual casino. And then all of a sudden these people start going into the casino to play blackjack from their house. You know, that's kind of where I see some of this going. And it's not just gambling, guys. Like, it's work meetings. Like, you and I will be able to hang out in the metaverse, do all sorts of cool things. It's rigid right now. It's struggling, but, you know, we're going to get there. It's kind of like Google early on, or Apple early on, or it's growing pains. You know, it can be difficult. Amazon, you know, if you had held Tesla, if you had held any of these apex assets, you had periods where you were like, I don't know, man, this is rough. But if you had just bought more or just stayed the course, look at you, you know. So that's kind of how I feel about the metaverse, but we're just gonna have to see. So yeah, we got commercial real estate. That's the elephant in the room nobody wants to talk about. Guys, we don't need it, okay? We don't need it. All these empty floors, you know, these empty skyscrapers in these downtown areas, I don't think we're ever going to need it again, or maybe just half as much, you know. And you might be like, oh, well, then turn it into housing. Not easier said than done, man. I don't know what's going to happen to commercial real estate, but I'm not holding that bag. So if you're one of those people that's like, well, maybe I'm supposed to buy commercial real estate because I can get a whole factory for like $1 right now. Dude, I'm not doing it. The metaverse is going to dematerialize all that. The tech giants, NVIDIA, they're killing physical real estate. I mean, think of it like this. Do you even need a big bedroom anymore? Remember, like, the gold standard used to be like a big master bedroom? What's in it? Like, TVs are tiny. Like, I don't even turn my TV on half the time. I'm just looking at my phone. My point is here, kind of like Microsoft, Apple, Amazon, they ate the material world. Like, I can sit in a much smaller room because my electronics just keep shrinking. And I don't really need, like, big, clunky crap. And I don't need tons of square footage for real estate. And frankly, I don't need a good real estate location in a downtown that gets a lot of foot traffic. I'll just go create a metaverse casino and we'll get 500 people there like tonight, kind of thing. Or not, but that to me, guys, that to me is where it's going. Put it like this: do you want to go do a tour of the Great Pyramid of Giza and like get your, fly all the way there and then get jet lagged and then pay thousands of dollars and then get pickpocketed and told like, oh yeah, sorry about all this, like, but you got to do the pyramid? Or would you like to just put on your metaverse glasses and do a pyramid tour in 360 4K definition as many times as you want from your bed for free? Without any of the bad. So that's some of the, I'm not crapping on visiting the Great Pyramids of Giza. I would like to see those places in person, but you see my point here, guys? Like, the future is not factories full of people getting paid good wages. It's not. The future is these automation, AI. It's a few shareholders at NVIDIA accruing all the value for destroying half the math teachers. So follow me here. I know you're like, where are you going with this? Just hang on, and this will start to make sense. With the metaverse and NVIDIA, we don't need 50,000 sixth grade math teachers. We need one good one. It's going in the metaverse. All value will be accrued to the shareholder and that one teacher. The other 49,000 teachers that teach math in sixth grade, they might be going away. The truck drivers, same thing. We have a ton of truck drivers. It's going to be very disruptive when we lose our truck drivers because we have automated trucking, which whenever that decides to happen, I'm not putting maybe another 20 years away. But my point is, the future is not cutting 100,000 paychecks for your trucking company. The future is paying like 5 people to oil the robots so your fleet of trucks does everything, in an automated way. Like, I guess what I'm saying is, real estate is kind of leaky right now. Maybe not residential. We need that. People need a place to live. I'm a homebody, man. I enjoy my house. I enjoy being here. So, residential real estate will probably be okay, but I don't want your empty factory sitting out in Buckeye, Arizona. Like, I don't want it. So I'll let somebody else buy that. Commercial real estate is a problem, you guys. I'd stay far, far, far away from that. And all the regional banks that have exposure to commercial real estate, they're getting killed. So it's not good to have on your balance sheet right now. Look at some of those smaller regional banks. They're completely set up for failure. They're holding a bag. It's a ton of commercial real estate, and JP Morgan is just licking their lips, and they're going to gobble them up. And we're going to go from 3,000 banks in the United States right now down to like 1,500 in the next 10, 20 years, and then it's going to get cut again to 7, and eventually it's going to be 5 banks and not 3,000. You see where this is going? Which is why we like JP Morgan on this channel. But that's a different topic for a different day. So the market's really kind of in a crack up boom. Okay, it's stagflation. It's low-ish growth and a lot of inflation. So maybe not full on stagflation because we are getting a little bit of growth, but real economic growth is being completely stripped out by fake money and stock buybacks and low interest rates. So make no mistake about it. The Fed tried to sell you that maybe they would raise interest rates like a couple times and inflation would come down. Yeah, how's that going, But on this channel, we never fell for that. We've been constructive, high growth tech, energy, crypto, precious metals this entire time. And guys, we're doing just fine. Maybe though, instead of a crack up boom and hyperinflation this year, like if these frothy and just super hyped up on Mountain Dew markets, maybe they'll start to calm down a little bit and we'll get a kind of a kangaroo market going, little crab market, just kind of up and down, sideways market. That's a kangaroo market or a crab market, just kind of, not really hyper bullish or bearish. So that's kind of where I lean, is either crack up boom continues, hyperinflation, stock market just continues ripping higher, or maybe a little bit of a kangaroo market. Maybe we'll get to May and June and things will be kind of more or less boring for equities, which I think would be a good thing. It would give the middle class and the real economy a chance to catch up. But will we get it? I don't know. It depends on how badly the Fed incinerates the currency and the Treasury incinerates the currency with interest rate cuts. Guys, why are we cutting interest rates in May and June? That's like the Fed showing up to a 5-alarm inflation fire with gasoline, because cutting rates is just going to make inflation worse. It's wild. It's out of control. It's a bit of a fascist takeover if you want to go by definitions. I'm not talking about the right-wing ideology, but I am talking about like the system, the man, the government, kind of gobbling up the private sector and creating their terms for how things are going to go. We're seeing more and more of that. Consolidations. It's all a bit fascist, really. The Fed and the Treasury backstopping the market through COVID. That was fascism. It breaks my heart, but I'm done mourning it. And we did see something similar in 2008. QE 1, 2, 3, 4. Ben Bernanke kind of swooped in, printed a bunch of money, picked winners and losers, saved the economy. Right? That's gaslighting. We got Disney and Boeing also kind of being stinkers right now. We talked a little bit about the Boeing stinking. Boeing is just going to need to get it together, okay? Stop letting the doors fly off, quality controls. Just get it together, man. Kind of create a better public image. People are really starting to make fun of Boeing. Boeing needs to have some tough conversations, and I'm sure they are right now, about how to be safer and just get their act together. It's kind of ridiculous, Disney, same thing, going through a bit of a culture war. They also have a CEO, Bob Iger, who's just like taking the biggest bonuses ever, just paying himself out, letting the company just, flounder. But I own Disney and Boeing, and I'm going to probably own them in 5 years and probably still own them in 10. And, you get the idea. Probably they're not really trading vehicles, and I'm not willing to give up on them. They're monoliths. Okay, they're monolithic. They're monopolies. Boeing has like the alien spacecrafts. It's like a terrible business reason. You guys are like, dude, you're such a weirdo. But honest, low-key, I love Boeing for that reason. Because I know if we see a video of a UFO, high likelihood that that's either, could be an alien or non-human intelligence of some form. I'm totally with that being a possibility. But if so, Boeing's already recovered the crash and taken it apart and patented all that, or that just is Boeing, and they're 25 years ahead of whatever you're flying around in to go visit grandma. You know what I mean? Aviation for us, like if you fly Southwest or something, hasn't changed in 60 years. It's kind of pathetic, the lack of innovation in aviation. Just commercial air travel. It's really pathetic. But do we own maybe some crafts that can like do 90-degree turns going the speed of sound, like and they're bending gravity, so the person inside isn't even pulling G's. Like, dude, I don't know. These are the things I think about at 3 a.m. You know what I mean? Got the Kellogg CEO just telling everyone it's great for me because everyone's eating cereal for dinner. And that's really sad, you guys, that we're at a point where the middle class is struggling so much that they're missing meals and they have to eat low-margin, crappy food for dinner. You know what I mean? So Kellogg CEO, hey, he's in a great mood now that you're all nutrient deficient and having to buy his crap at the center of the grocery store where all the low profit margin cheap crap is, because you can't shop the edges of the grocery store where all the good stuff is, like the bread, the milk and the bacon and the dairy, and the probiotics and the fruits and veggies that you should be eating. We're not a nutrition channel, but eat those leafy greens, guys. In my opinion, diet should look something like mostly fruits and vegetables with some meat protein, and that's about it. There's no such thing as essential carbs. There isn't. There's essential oil or essential proteins, essential fats, but the Kellogg CEO who just sells carbs for a living, those are all corn and rice derivatives, by the way. He's having a great time, so sucks. State of the Union, I watched that. I don't like Biden or Trump, guys, so there you go. I don't like either one. I'm done with this 80-year-old men plundering the country crap. This is my country. I'm in my mid-30s now. It's supposed to kind of be for me. I've served this country. I've worked very hard. And it's the same people that were running the tables when I was in 3rd grade that are still running the tables, and it's a trough, guys. So that's what it is. It was a pretty partisan speech. I know they have Biden hopped up on all sorts of amphetamines to get him through that speech. It got him to about the 30-minute mark, and then he starts to kind of, It's sad to me, guys. And I'm not saying that in a political way. I'm being as apolitical as possible. This is not about left or right, Democrat versus Republican. This is about really old people, the old guard that have been plundering your country forever, doubling down on the plundering. And they got this big old trough in DC that both of them slop out of like freaking pigs. And as long as they get to keep their trough, they're going to let you have extra bathrooms, or they're going to do whatever they want to do to keep you off balance, confused, and bickering about stuff that doesn't matter. Because what was the first thing Biden brought up in that State of the Union? Ukraine. That's disgusting to me. It's the State of the Union address, and the dude goes right to Ukraine. This is my trough. Which, that's not going very well. But that's a different topic for a different day. That's really all I got for you guys for right now. I hope you get something out of this. Like, subscribe, comment, share, whatever. We'll reconvene as things progress. Hope this video finds you doing well. Till next time.